Hi, good evening. Today is July 13th. S&P 500 made yet another new high today. It really is incredible to watch. We have practically doubled since the COVID lows made last year. And nobody anticipated that, or at least I certainly didn't, when the COVID hit, that the economy within a year or so would recover so strongly and that the market would actually double from the lows. But the great support from the government obviously is helping out. And it seems like this is not ending either, because starting, I think it's either this week or next week, the first payments will be coming in for the tax refunds for children. It will be, and they will be sending 300 per month for children under age 6 and 250 for those between 6 and 17. So it looks like the free money train is still kind of going. So we're on pace to beat the record in 1995. We had 77 all-time highs made in 1995. And if this pace this year continues, we are on pace to make 74. And I think now we have 40 new all-time highs already this year. If I were to guess, I don't think that the second year is going to be as amazing as the first, but we will see. 1964 was the last time when S&P 500 made 11 all-time highs in 12 days. This is only one example, so it's kind of hard to judge, but S&P 500 was at the same level at mid-September and mid-December of that year. So last time we had so many all-time highs and enthusiasm, the market didn't do well for the second half of the year. That's not to say that it had a crash or anything. It just didn't continue accelerating at the same pace. But it's only one example. So, and as of today, we have now 12 all-time highs in 13 days.
Of course, 1995 was pretty much right at the start of a multi-year rally, whereas 1964 was coming closer to the end of a multi-year rally. So
today we had a double reversal day. We opened up with a gap down on bad inflation numbers, but then quickly rallied 30 points all the way to new all-time highs, and failed again and sold off pretty much all the way back to where we started after the auction. So now the vol trigger level is around 43.05 or so, right?
Mm-hmm. Right.
And I think this is the level we probably will revisit in the next couple of days. I was expecting this level to be tested earlier, but we did make new all-time highs yesterday and today again, but sold off today. So it's kind of a break even for the week so far. So 40.50 is 40.40, the Soji level around 40.50. That's what I will be watching. And if we break that, then 4,300, that vol trigger level should be. And what kind of was a red flag for me today, and why I was expecting S&P 500 to sell off today, was Russell, given that it was really not participating in that excitement, in that move of NASDAQ and S&P since the beginning. It really never participated and was down almost 2% for the day. And it also did not make new all-time highs for the last couple of days either, unlike NASDAQ.
It's back into last week, right?
Right.
Into the 9th when it last made an all-time high. So
right. So it's a little ominous. And also JP Morgan and Goldman reported earnings today, and that's kind of didn't go well for them. They were down for the day, dragging, the financials were dragging it down as well. So NASDAQ today had very similar trajectory to S&P 500. It rallied on the open, but then made new highs and reversed. It sold off mostly after the bonds auction, and the rates Nasdaq didn't like that, and we closed also on the low. And there's another chart I wanted to share. According to the data compiled by Bloomberg, US technology stocks soon will be more expensive than at the peak of the 2000 dot-com bubble. S&P 500 Information Technology Index closed on Monday at 7.43 times sales, which is a little less than 0.3% from a record high in March 2000 peak, as you could see on the chart. But at the same time, the S&P 500 total index, let me move this, has made new highs compared to 2000. About 3 years ago, it exceeded that level, 3.5 years, the price to sales ratio. So that's not, that just saying that even though we're approaching 2000 peak, obviously it doesn't mean that we will stop there. But the point I'm trying to make is that the stocks are expensive by multiple valuations. And even Morgan Stanley was writing in the report Monday, just another example, that technology stock valuations are at odds with unprecedented headwinds, such as fierce competition, high taxes, stricter regulations. And I do agree with all of that, because we all know more regulations is coming. Like, for example, Trump is suing internet companies for freedom of speech. And so he claims that they're kind of, and I'm not a lawyer, so I'm paraphrasing. So he claims that they're becoming public square. So they should be regulated more like utilities company, where they cannot just, and that all makes sense to me. They shouldn't be able to block certain people based on their political affiliation. The president of the United States is banned, and I've been lamenting this for a while. So I'm certainly, for once, glad to see that he is suing them. And I think this lawsuit will be very interesting how it plays out. If it actually works or not, I don't know. But if it does, then the companies may be opened to more lawsuits and monetary damages, because it's a class action lawsuit, as well as to stricter regulations.
But boy, if only Trump had been in a position to do something about this, right? I mean, it wasn't as if this issue of had just come up with him being banned on social media. That all happened in like January, and so it was something that he could have done while he was president, I think. And there were enough people in Congress who had raised the issue, like Josh Hawley and so on. Maybe what they want to do wasn't right, but nonetheless, they were raising the issue of Section 230 reform for some time.
Oh, absolutely. I've mentioned this many times before, right? I don't know why he didn't do something when he could, but better late than never.
Well, the Section 230 reform is really that if that I've heard proposed is more or less that they have to choose, but they can be in this sort of middle ground between like fact checking and editing, and at the same time call themselves
right
a platform. If they want to be a platform, that's fine, but then they need to really cool it on the editing.
Exactly. And it seems like almost every conspiracy theory that they have been banning half a year to a year later has become true, whether it's the origin of the China virus, COVID virus, or now the vaccine side effects, which now they're putting actually warnings on the vaccines, that they seem to be discovering not only new variants of COVID every week, but the new side effect for the vaccines.
Right. Yeah. Like whether or not, I mean, exactly. So, I mean, just being able to state, well, it might not be right for some people, but it's right for other people.
Right.
Or right for higher risk.
People should be able to do the choice, right?
Yeah. So it's and then letting people make the decision. It's really very very strange environment right now that I think we're in, and I think it's it's definitely not adding credibility to the media in general either, because they're clearly not reporting on some of these things until it's becomes they can't not report on it anymore. So is this ARC Innovation Fund, and I just think it kind of captures a lot of momentum stocks in a particular style that really we had this big top back here in February, but it's it bottomed out here in May. And what's interesting is it bottomed out around the time that a lot of crypto was topping out. And so but we've seen a move back into this fund. It's an ETF, so it represents the underlying as well. And but over the last week or a week and a half, we've seen a real pullback here and a big move down today, nearly 2%, along with Russell, right? So so I think this is something to watch. It is kind of hovering right here around the 200-day moving average, and if it bounces, then that sort of, it could be game on. Again, if it breaks it, then it could be, it could be that we retest that low, and it's maybe more bearishness on the way, but
right. And they own a lot of Tesla, and Musk has been in the spotlight lately with the lawsuit about his solar panels venture. And just today in a courtroom, or yesterday, he was telling somebody that he really doesn't want to be the CEO of Tesla. He said that he doesn't like to be a boss, and so he wants to be an engineer. So I don't know if he's planning to quit the Tesla board and to avoid all the potential issues that he knows Tesla is having, because he has promised people repeatedly every year that he's going to have a self-driving vehicle. And every new autopilot that they have released so far has fallen short of his promises. And he himself even tweeted the other day that it's kind of hard to do that. Well, yes, we all knew it's hard to do that, but you're the one who promised it. And so,
well, it's performed pretty well lately. I mean, here it was up really big yesterday, big move yesterday up, and yet this week and today a bit of a pullback, and it was a big pullback and more pullback after hours, but it's rallied pretty nicely. It's not far off its recent. No, it's way up its all-time high, but
right,
it's
30%.
Yeah, it's not far off its.
Right. No, my point was that ARK ETF is kind of tied a lot to Musk, and so they're very and also China stocks. There have been a lot of repricing of China stocks because of that. There was a latest IPO that China banned the application, some ride sharing service that China banned, and then US is banning some other stocks. So it seems like there's and Kathy actually tweeted about it, saying that there's a repricing of China stocks and dangerous Chinese potential regulations. And so, my point still is that I'm obviously not Victor, but I don't think now is the good time to go all in on tech stocks. While obviously buy and hold works over the long haul, going all in on tech stocks right now, given all of those headwinds, regulations, and everything, I don't think the next half a year to a year we will see such spectacular gains as doubling as we've seen since the lows. Andy, what do you think?
Definitely the political environment is pretty unfriendly right now. I would just say to stocks in general, it's kind of a very, very, maybe some will do well in this environment. I think that I've been watching, well, like today, all of these kind of infrastructure type stocks like Alcoa, US Steel, they were all big today. But I think they'll benefit from infrastructure spending, maybe directly or indirectly. I think that I don't know if I really consider like crypto to be tech in the same, it is tech, but it's not tech in the
Right.
same sense of
A little
like a
different.
hardware product or Tesla or something like that.
Right.
And so it's more of a service in a sense. And it's also if you investing in a coin is different than investing in a stock, like a
Right.
Coinbase. But I think depending on what happens, we could. Yeah, I think there will be maybe I'm a little bit bearish on some of the momentum names right now, like a Tesla. But I think there's some good investments, and I think that there's a lot of like institutional buying of Coinbase, or there are a number of
Mhm.
firms that said it may be even a little bit over, but undervalued based on where it is. There's a lot of IPOs coming in this space a little bit later this year. It was just announced a few days ago that that Circle was going to be going public through a SPAC, reverse merger, and they are the their sponsor or the company behind one of the larger stable coins called USD Coin, and so there's Kraken announced that they're going to be going public. So
Oh yeah, I didn't hear that. Interesting.
yeah, so that's coming, and so there's a number that of firms that I could that are going to be going public. There will be hype around it, and if it coincides with a little bit less bearish market in crypto, which it's been bearish since really since definitely since May, but really the bearishness started, or the bear market, in my view, started in April with Bitcoin topping out, and it's continued, but it really intensified when Ethereum and other altcoins topped out in May.
Right,
But
but before we go to crypto, let's talk about bonds and inflation,
mm,
because we would be amiss not to go there. Inflation had a massive beat over the expectations today. The headline CPI rose 0.9% month over month. The
right.
expectations were for half of the percent. It was the biggest month over month jump since June 2008.
Mm,
So it's the fastest acceleration in the last 13 years, but it was actually the highest core CPI in 30 years. So that all caused the year over year headline to print 5.4%, which is an extremely high number. And it's no longer just the cost of goods that was going up, caused by shortages and high shipping rates, etc. Now it's also air travel, hotels, as COVID is kind of winding down, or at least people are sick of and tired of staying home. Everybody's traveling, so the cost of hotels is going up, and air travel. That's on top of obviously all the rental cars and actual used cars prices are insanely high. Now it's also rent prices are going up. So all of this compounded uh, caused the
Yeah, and that was the biggest single item in the CPI report. That was, or the largest increase was in used and new cars, right? So that's there's plenty of demand, and there's shortages in parts and things like that, and that's exactly what happens in an inflationary economy, right? There are shortages, but the shortages, they get blamed for the inflation, but the shortages exist because there's like there's a breakdown in the market in some way, and um, uh, largely because there hasn't been enough investment in basic things like materials and so on. When for example, like gold and silver, even though they're not that far off their all-time highs, right? I mean, let's say 20%, but that's still they're at a very high level, but they're still, because of the cost of production has gone up so much. There are a lot of mines that are not online are that wouldn't be profitable even at this level, and so they might be operating, but they're not operating. So it like would take even higher prices to bring the supply on. Like crude is at a level where a lot of fracking is actually profitable at 75. It's kind of borderline where fracking is profitable. But if it were to drop to say 50, then a lot of fracking would go offline and would end up pushing prices back up, right? So there's some of these dynamics that that have to do with material shortages, that the commodities prices are going to have to go up, but some of the dynamics in the commodities markets are holding prices down. So.
Right, but most of the Fed officials believe that inflation will decline to around 2% over the next 2 years, they said. So, that means next year we still could have another 3-4% inflation, and even they're admitting it. Maybe in 2 years it gets back to 2. So it's incredible that they really don't care, but most people are feeling that.
They can't. Well, see, and my view is that the Fed can't raise interest rates, okay, even if they wanted to, because the debt is so large now that if they were to raise short-term rates up to, I don't know, let's just go back to let's go back to the pre-financial crisis, what would have been considered an average level, like say 5%. If they were to raise Fed funds rates of 5% or 4.75 or something, I mean, the debt would be, the interest on the debt would be, I don't know, it would be the single largest after a year or two. It'd be Social Security or Medicare. So they're kind of caught between a rock and a hard place.
Right, not to mention the mortgages that people have. But it was interesting. Right. It was interesting today, the bonds action, the 30-year bonds action was interesting because it was also kind of following the stocks. It was up on the open of stock open today, and the bond prices have reversed only after the 30-year auction that triggered the selling. And it was quite a reversal, as you could see. And so it wasn't really the inflation print that caused the bonds to sell off. It was the auction. So it's I'm not exactly following that whole dynamic, but I found that interesting today. And the dollar also moved a lot and spiked. So lots of things are still very much repricing. And the dollar seems to be about to, the dollar index seems to be about to break out from that range we've been in the last, year or so?
Right. Yep. It's come close.
Yeah, the dollar looks like it's about to break out.
Yeah, but is this a reflection of capital flows into the United States,
risk,
the U.S. stock market?
Maybe it's a repricement of risk. I don't know.
Right. It does. It exports our inflation to some degree, as they say, right?
Right.
Because it's the dollar going up. There's some interesting dynamics. I see some reversals from previous few weeks. It's a question of whether this is a real trend change or not.
Right. And there is another interesting article by Sentiment Trader that I saw that shows that the latest estimate of hedge fund exposure now is that nearly 40% are net long stocks, from almost being flat a month ago. And if you look at the chart, it's usually not necessarily a positive thing going forward, although there is sometimes a time lag in between. And according to this data, that when exposure is below zero, S&P 500 returns an annualized 15.2% versus only around 1.4% when exposure is above 25% as it is now. So not only the small traders are very bullish the market, as I've shown before, various charts of small option bets, but also the hedge funds are very bullish the market. So everybody is so bullish the market with all of those headwinds for technology and regulations and everything. It's dollar increase. It seems like I said before, I don't think it's necessarily a good time to buy stocks right now, but we need Victor to come back and say that I'm wrong.
Well, he'll give us the bullish view if I mean the long-term bullish view, of course.
Right. Long term, of course, I agree, but
I agree. Yeah.
yeah. And also, before we get to crypto, there was a very notable move today in SPCE, which is the Virgin Galactic SPAC. It sold off today around 7% after trading as high as 60 pre-market yesterday, and then falling around 30% and closing on 40. So the reason I'm bringing this up is this is just another meme stock that very similar to when Musk went on TV and that marked the top for Dogecoin, or plane over Miami was flying advertising to buy GameStop stock. This was marked the top for that. And now, same thing. The second Richard Branson goes to space, that pretty much marked the top or close to the top, because this doesn't reflect the pre-market prices, which went up as high as 60. So and now we are sold off since pre-market around 40% since he flew into space. It's a pretty cool thing to do, but the optimism obviously has all been priced in, and now they're selling around 500 million worth of stocks.
I would say though, okay, the what is unique about the stock is that, for example, SpaceX it will IPO here in the next year or so probably, and it's a company. I mean, they're building rockets and so on. It's a little bit different than Branson's project or company, but you can't, at least on New York Stock Exchange or whatever, you can't buy SpaceX. You've been able to, if you're like a Regulation D investor, maybe be able to get a little bit of it, but not a lot. And so this is one of the few true space plays that are available to ordinary investors. And I mean, there are satellite plays, but that's different than this, like humans traveling in space, that type of thing so it's just the fact that it's sort of like, not that Coinbase has done well, but it's sort of like, Coinbase is the only real, there's some that are maybe pure plays, but it's the only company that's a pure play right now. And there will be others that come, but often these pure, a single pure play will have these kind of meme dynamics. And that's been true for a long time.
Right, and it's a cool idea. I'm not knocking it down. It's not like it's a Dogecoin, which is worthless. It's obviously a cool idea. I'm just merely saying that usually those big events, they coincide with price topping, at least locally, for some time. Like this was, for example, was a 40% drop. And what was also interesting is that Jeff Bezos is planning to take a similar trip on July 20th aboard his own rocket. And today Amazon had a reversal day. So I wonder if that's also a bit significant, back to my point that it's not only that it may signify a local top in the NASDAQ as well, because not only the market is racing to the top and all of this competition between Bezos and Branson and Elon Musk, who's going to be making it the space trip first. Jeff Bezos' company is Blue Origin, and so he's supposed to go to space on the 20th, which is a week away or so. And so it's a little concerning to me that all of the richest men who made all of the money in the stock market are all racing to space just as the market is. I'm not saying that they shouldn't, or it's really is a cool idea. I'm just saying that it's a little too much of the optimism and exuberance across the board. The market is going to the moon. Everybody is going into space. Everybody is all in. Market is making new all-time highs. 13 or 12 days out of 13 days in a row, all while the breadth is horrible. So the few big companies like Amazon and a few others, Apple, Microsoft, are in NASDAQ are holding it up, while the breadth is really not. The most of the rest of the stocks and Russell, everything is selling off. So
Agreed. Well, it's time for a little bit of caution, I think, right now. I agree. The so maybe a few minutes on crypto that
no,
I
yes,
would just
that's
say
what.
that it's been pretty bearish in crypto world the last several days, and I think it has more to do less to do with I'll go to daily chart, but less to do with something internal to crypto. Actually, the news has been quite good, and more to do with the macro environment. And I just think there's this sort of general risk off mood right now, and until the market stabilizes a little bit, crypto is going to continue to not perform very well right now. It's kind of a bearish mood right now on across multiple time frames. Right now, we've had this series of lower highs and lower lows recently. This is just looking at Bitcoin, and if you look at it on a smaller time frame, like in an hourly time frame, it's you see the same thing there, and it's just kind of a negative mood. And I wouldn't. It might be a good place to go long for a longer term position, but I wouldn't expect it to be a good trading entry right now. But I do think that if we get if Ethereum can get back above, and although some people would say that like 2000 is a important psychological level, I think the more important one for just in terms of technical levels, give confidence to the trade would be about 2050 right now, and that's the where the 200-day moving average is. But I think the really important one is about 2200, and on Bitcoin it's a little bit higher. It's maybe more around like 35,600 level, but it's got some work to do. I think it's kind of negative right now. I'm not changing my positions or anything like that. I wouldn't really sell anything or try to hedge unless it were to go back below 30,000 on Bitcoin, and maybe like 1,700 on Ethereum. In which case I'd say, well, it's going to be a more extended bear or kind of like another crypto winter. But I think there's a chance for if the stock market stabilizes a bit, and then the risk environment improves a little bit, then I think we could see a rally back to maybe a snapback. But it's right now kind of a bearish environment. And I would just point out that there has been some good relative strength in some of the, we're looking at an hourly chart. I'll put up a daily chart, but there's been some pretty good relative strength in some of these DeFi tokens. Like this is Synthetics. I think it's been about the strongest, but Uniswap is another one that's been relatively good or good relative strength. Uniswap just had a very important announcement today that they are now available on what's called a layer 2 on Optimism on Ethereum, and so this would greatly reduce the costs of trading and so on, and so it could be a real revenue boost for this, and it's not reflected at all in the price of the token. And that was just announced today. Synthetics, they will follow suit very quickly, and I think that might be partly why it's recovered a little better than some of the others. So it's I think there's some real opportunities here, and we're already seeing it reflected in the strength. Uh, but otherwise, it's kind of a bearish environment. This might be actually a good buy point if you like to buy, when it looks really crappy. This might be a decent entry, but I would say it's a higher risk entry than one where we seem to have reversed and we started to rally. I tend to like entries like this, but I don't think they're for everybody. And most traders that I know that stay traders, they would wait for a little bit more of a recovery and then build a position that way, as we're with stop orders.
Right. Well, speaking of stop orders, if I were trading Ethereum, which I'm not, I would probably had buy stops resting at 1600, 1400, because you never know with Ethereum and other crypto that they often have those, like as you could see, the long wicks where they just want to stop people out and buy and get.
Oh, and that's exactly. And I agree completely with that strategy. You can put in some kind of low ball bids and you will catch them because of just how widely this swings. I mean, here in one day, it's moving 5%, which is kind of not all that unusual for Ethereum.
Yeah.
And I don't know what I have to look at the average volatility, but that's kind of like not that unusual of a move. With the stock, it would be like one of the biggest events for the stock all year. But with Ethereum, it's probably 20% of days have a move at least this big. And there's risk associated with it, but it has maybe more upside potential, more reward potential as well. But I agree with that approach. I mean, had it been here, let's say in the 2300, 2400 range, and where if you were making some low vol bids there around like 1900, you would have picked up some. And so I think we could have, I don't know if we'll have another thrust down, but that would be one strategy to put some around like the 1880 range, 1850 range. But I think it's, I was expecting more of a bounce over the weekend and we've not seen it. This is a big move down here the last few days. So I wouldn't be surprised to see it continue at least a little bit further.
Have you seen the tweet from Bob Pisani from CNBC today? He was saying, he was quoting Nassim Taleb, the Black Swan author, that he was saying that in its current version, in spite of the hype, Bitcoin failed to satisfy the notion of currency without government. It proved to be not to be even a currency at all. It can neither be a short or long-term store of value. Its expected value is no higher than zero. It cannot operate as a reliable inflation hedge, and worst of all, does not constitute, not even remotely, a safe haven for one's investment, a shield against government tyranny, or a tail protection vehicle for catastrophic episodes.
I would just say that Taylor likes to present himself as an intellectual, but as a scholar, but he hasn't even bothered to study any of this, and even the sector, and even make distinctions. And he claims that at one of his classes that he charges people, tens of thousands of dollars for,
right,
that he brought in a Bitcoin maximalist. Well, number one, a Bitcoin maximalist is only going to be speaking for Bitcoin and not for other cryptocurrency. And the guy didn't, really do well. But I mean, it's sort of like, I brought in a defender, and they couldn't answer my queries properly or whatever. I mean, it's dishonest in my view. It's a really dishonest approach that he's taking, and he hasn't bothered to study it, and he's just dismissing it because, frankly, it threatens his business. which is to, I mean, he makes more money from social media now than he does from actually trading anything. But where he makes money is on where he does make money in finances, advising like Universa tail risk fund, where they buy these out of the market puts and so on, and hedge, and so what they want to appeal to people in traditional finance or legacy finance who want tail risk hedges, and they try to appeal to, let's say, family office or other institution, a pension fund, to allocate, well, like 1% or whatever to this fund, Universa, and and there's some evidence that that kind of tail risk strategy, or having that as a small part of your portfolio, can work well. But he's not studied this, and shows his lack of his lack of understanding and perception whenever he spouts off on this. What's interesting is that the guy that he actually does work for, who is Mark Spitznagel, who runs Universa, he's far more neutral on it and has actually had intelligent things to say about Bitcoin and other crypto. So I would say listen to the guy who actually makes money, not to the self-styled intellectual. And I say that with a lot of kind of painfully, because I really enjoyed reading Black Swan and some of his other works, and for him to kind of spout off on something and kind of a careless way. And you heard, I mean, like everything he's saying is kind of inflammatory. It's not
right.
It's intended to.
He likes to be bombastic. He likes to have that
Um,
confrontational persona. This is his stick. He goes on radio or TV or whatever and assaults people on Twitter, and this is his style. He likes to create a confrontation and not
well,
just argue, but insult people as well. This is
I just I guess I don't rise to that kind of crap. I just unfollow people when they do that kind of thing. And it's sad to say, I've had to unfollow him or mute him, because if he's if he made two comments that weren't well educated, and showed a lack of understanding, then I dismiss it. But he's chosen, like some other people, to spend a third of his time now spouting off on this, because basically, and the way I see it is, he missed the opportunity. And so a lot of people sometimes in finance, when they miss an opportunity, like of a whole asset class or something that they didn't anticipate, they can't admit that their ego is so big that they can't admit that they messed up by not investing in that early enough. And so they have to, they can't be wrong. They won't admit that they were wrong, that they were that wrong. And that it's a cognitive dissonance that drives that kind of thing. So it's even like I guess there's a level at which I would sell Bitcoin on the upside and on the downside. And I'm not married to it. I'm not stuck to it. But I've made a huge return on my original investment. So what does a 10% move up and down do to me? It's not really that important to me. But I do have upside and downside levels at which I would sell. I'm not averse to changing my mind about it. But the people that are averse to changing their mind about it, it's hard to listen to somebody like that.
Right. I mean, Taleb has blocked me on Twitter years and years ago when I challenged his GMO views, saying that sometimes GMO is not as bad, and sometimes it's very similar to nature doing its own GMO when there are new cross-pollination of various things. It really depends. And sometimes That's the only way to help people population not to starve. But instead of reply, I got a blog. But that's
Yeah, well, there's a gentleman who was professor at I forget where, but he uh, Taylor uh, published or self-published this paper on Bitcoin, and he pointed out, well, here are, I wrote my own commentary on your paper, and hoping to engage with them. And that guy was blocked. And all this criticism is irrelevant and it's wrong and whatever. But no, the critic was exactly right. And Taylor won't even consider. He won't. It's all about. He uses social media as just a platform to market himself. And if someone is trying to get, as he perceives it, into his spotlight, then he has to slam them. Like, how dare you? Get in my spotlight. It's more important than making a good argument. And I think there was a time before he became a celebrity that, like, he wrote a book in the late '90s that was a great book, and it was published by the same publisher and had the same editor as Education of a Speculator, and that was Dynamic Hedging, and that book was very influential in how hedge funds are run today. So, I when he published when he wrote Fooled by Randomness and then Black Swan, which they were kind of slightly different in terms of what they were saying. They were his first kind of popularizations of some of the ideas in that book that was a lot more technical. But I like both of those books a lot. But then it seemed that with the celebrity that he's maybe gotten kind of lost some of his perspective would be my
right.
that might be a point. I still respect him, but not as I've lost some respect with especially how he's gone, commented on crypto or Bitcoin has been his only comment, and then using that as a slam across all cryptocurrency. When it's when the U.S. dollar had been around for 11 years. How many people took the U.S. dollar seriously? The very first version of the U.S. dollar denominated bonds, we call the Continentals, and we defaulted on those after the Revolutionary War. And so the U.S. dollar wasn't taken very seriously for a long time. Now, it won't take that same amount of time. It hasn't taken that same amount of time for Bitcoin to be taken seriously, but it takes a long time for some new financial idea to really get adopted to a point where people say, okay, this is legitimate and we can put this in, a safer, we can now call this a safer investment. And Bitcoin's only been around for 11 years, or 12 years now. So how, that's a blink of an eye and when it comes to history.
Right, I agree. My only, just to this point, I was surprised today that on inflation data that came in so much higher than expected, that Bitcoin did sell off instead of actually, but obviously it's been selling off for a while as inflation data has been coming in hot before. So it seems to have been all priced in as a while back.
Yeah, I think it was kind of sell the news a little bit because, as you say, like after the inflation, as you point out, after the inflation news came out, I think bonds actually went up. It wasn't until the auction that they went down, and then the dollar was up today. So it was sort of like sell the news or opposite. It just designed to frustrate people. Oh, inflation, the dollar is bad. No, it'll do just the opposite. And that's So the question is, though, to pose this is the question I would ask Victor, and I don't know the answer to it, but was the move today a deception, which, he's written a lot about that and commented a lot about that markets, like there are a lot of, like the example of the Moz who that survived that in like say 19th century England, when the factories were belching out all the soot, and the moths that survived were the ones that were darker, because like the trees would be covered with soot, and they could survive better because the birds couldn't see them, right? And so the ones that could imitate the bark better survived. But the same thing in the market, that you've got these deception moves all the time. Like on a day like today, the dollar up 0.5%, bonds down. I mean, was it the fake out, or was this the real move? That's the question.
Right. And also, a lot will depend on how this whole COVID thing progresses, because while in my mind and in the mind of the vast majority of Floridians, this has been over a long time ago, apparently it's not over in the rest of the world. For example, in France, they have just made vaccines mandatory for the vast majority of people. And to me, this is amazing how it's supposed to be freedom everywhere, Europe, freedom, etc. And yet they're the strictest of them all. You can't even go to a pub or a restaurant now, or even to a supermarket to buy food without a COVID passport. To me, this is insane. And France also mandated vaccines to all of the medical workers, and they will be not paid unless they get vaccines, which at the same time, something doesn't add up to me, because if you look at Israel, which has the highest vaccination rate per capita in the world, their cases is at 3 months high. They have basically doubled in 1 month. So as the Israelis are vaccinated, the cases of COVID keep going up and up. So what's up with that? Meanwhile, in South Africa, where they have all this they've been locked down for I don't even know years by now, and they just extended the lockdown. They have riots. They have, well, looting,
Right.
to be precise. It's what's going on in South Africa is totally insane. The country is plunging into complete chaos, and nobody cares about COVID anymore. People are looting everything. After they loot them all, they're actually looting solar panels. I've seen videos. People are dragging solar panels from the looted buildings. Then they set them on fire. The refineries are closed. The water cleaning plant is burning. The country is plunging into chaos, despite the military finally being brought to try to stop this. I've seen amazing videos. Citizens are self-defending themselves from the mob, where Christians and Muslims and Indians all coming together to defend their neighborhoods from the mobs attacking them. It's insane. I recommend everybody to not Google, to go on Twitter and look at those videos, because MSM obviously is not covering it. It's not PC. Everything is, great.
Yeah, it's well, and that's not really COVID related so much as there was a former president who was sent to prison because he refused to testify about corruption in his administration, and a court held him in contempt of court for not being willing to testify. And yes, he went to prison. He surrendered and went to prison, and so evidently what that had to do with is that former president Zuma is a Zulu,
right,
and that it's one of the larger minorities in I wouldn't call them one of the larger ethnic groups, I guess, within South Africa. And so it's a lot of the people that maybe, some people that are angry about that, but then a lot of people that are sort of jumping on the bandwagon of rioting and looting.
Right. The only reason I mentioned COVID is because they have been locked down and shut down for so long. Alcohol sales are banned that people are going, even normally people would go stir crazy. And then on top of this, you add political instability and then all of that inequality concerns. And it seems that the population is on the brink of explosion because now you have Cuba is also rioting, and of course Cuba wants to overthrow the socialistic government, but the MSM apparently tells me that the reason Cubans are rioting is because they want more vaccines. I'm
Right.
not even kidding. The Cubans are rioting because they don't have enough vaccines, and I'm like, what?
No, that was the most ridiculous thing I ever heard, and that came right from the State Department, which was
Right?
just ridiculous.
It's 1984 reinvented. We're living through it. You know, it's the Republicans who wanted to suppress and defund the police, and unlike the Democrats, you know, people are rioting because of lack of vaccines, not because of the socialism. They wouldn't even criticize socialism in the White House anymore.
Right now, it's very disturbing
Say the
to see
least.
some of these developments.
Yes, indeed.
But I think that, my view is how this affects the market is, in my view, these are the drivers of inflation. That the breakdown in trust is what causes inflation. It's not these temporary shortages. What changes the inflation expectation is the breakdown of trust. Like, I'm not sure I trust what the government's saying. I'm going to buy a 3-month supply of toilet paper, because you're not sure if it's going to be there or not. I mean, if they're not going to tell you there's a shortage coming or something.
But you know, I lived through the Soviet Union collapse, and there was enormous breakdown of trust. There was enormous inflation. We've been dropping 3 digits every 3 months or half a year. I can't remember now. The
Right.
inflation was catastrophic. People were lining up in stores. We had shortages, but we did not have looting like I see right now on TV and in South Africa or in America. It never once crossed my mind. I stood online in a store to buy basic food, supplies, or anything before the currency is devalued. Never once did it cross my mind to start looting the store I was online to. It has never happened. I mean, maybe like a couple of lone criminals, but here there are masses of people literally looting stores to the point where there is nothing on the shelves, and then they taking the forklifts that the store is loaded with and with the loading goods on them and the solar panels.
Right. And then it's like the pleas for, now we need to aid South Africa. It's sort of like, in a way, it's like the joke about the orphan who kills his parents, or no, the child who kills his parents and then pleads for mercy to the court because he's an orphan, right? and yeah, it's kind of shocking to see some of these.
It's interesting how this instability is happening at the same time across the world. South Africa, Cuba, in Haiti, the president was just assassinated. Like the same in my country, in Belarus, there is all this unrest. Ukraine, the NATO exercises. It's France makes everything mandatory. I'll see how that will go when they make people vaccinated mandatory. It hasn't come into effect yet, but if I were to guess, they will have riots as well in France. I'm not sure about the looting, but the riots probably will happen. And so all of this, and yet the market completely doesn't care, which is.
I think it cares. I think it's sort of this longer term macro driver that is doing things like creating inflation expectations. And I think I do think that I'm a little bit surprised that cryptocurrency isn't rallying more in this type of environment. But because it's like, if you were South African and like Johannesburg was still, or Cape Town, pretty prosperous cities where up until recently still have some prosperity, and they have a middle class and so on, and that's all in peril. Well, what do you do? I mean, the rand is collapsing against the dollar now, and as it should, as I would expect it to. But what do you do? Yeah, if you put your money in dollars, do you put your money in something else, in gold?
Well, if I were in South Africa, I would put my money into dollars and leave for any other country I could. Europe, America, Australia, New Zealand, anywhere. I would even get vaccinated and go into France if I were in South Africa.
Yeah, well, that's right. I mean, but I think that other currencies like like crypto are
Right.
a good alternative for. I mean, but I do think that but what I think the drivers of this, I think it's a little bit why crypto isn't doing better. I think it's just a set of factors that I think we'll see resolved over the next several months, but it could be bearish for a little while longer. But I am surprised that when there's this type of unrest and so on, that we're not
Right.
seeing more of a response in.
I think, like you said, in a few months, El Salvador is supposed to actually start implementing that law that they have passed a few months ago. They have until September 7th or something like that to implement and to make Bitcoin acceptable everywhere. And so from what I hear, and they seem to be so far not sure and struggling which exact payment system to use, because it's a big difference between buying Bitcoin on Coinbase and actually using Bitcoin on a day-to-day basis for transactions to buy coffee, bread, etc. So right now they're trying to find some third-party wallet to see which one would be a good fit and to make sure that the transaction costs are not as high. So most likely they will create some sort of layer on top of Bitcoin, which would not be necessarily buying in and out of Bitcoin constantly, but kind of having like a medium of an exchange between them and having a backup cash as well.
Yeah, and that exists already, that L2, but layer 2, but it's just a question of like getting everybody the accounts and this type of things.
Right.
But it'll be a really interesting experiment to watch.
Yeah.
The other thing that's happening is Ethereum is over the next few months is going to be all of these layer 2 second layers are going to launch. They already exist, but they're not really they've sort of been in beta test, but they're going to roll out with the main versions here over the next few months. You're already seeing that. It was announced that Uniswap is now on layer 2 and on Optimism, and there's several competitors to Optimism that are going to be rolled out too, and some of them are already active, but it's like maybe 10% of what eventually will be on that, and or 5% even. And so all of that is going to roll out, and then what's called EIP 1559, which will change the fee structure, and it could make Ethereum actually a deflationary currency where the supply will shrink over time instead of going up over time. So this is rolling out in about a month, and or it'll become active. There will be a fork of Ethereum, and it's already been, the miners have already bought into it and everything, so it's going to happen, and there won't be a competing fork. But all of these things are good news for Bitcoin and for Ethereum, I think. And but it's just that's the nature of a bear market, is that good news gets ignored. Positive things like what you see happening wherever, South Africa, or these crazy COVID restrictions, for whatever reason, the market's not responding. Well, that's the nature of a bear market. But it's but when it does change, then it'll respond very, very strongly. But the mood has to change, sentiment has to change from where it is right now.
Well, Andy, thank you very much.
All right.
Great conversation, and we will see you back on Friday.
Thank you.